Ernie, looking at the August report, what are we seeing? Are we seeing any expansion at all?
No, Cindy, our survey of supply managers in 9 states, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, the leading economic indicator from our August survey, while it was up a bit, is still below growth neutral. And this is the first time that's happened since the recession. So all in all, it's telling us this economy, this regional economy, is slowing down. And in fact, we're probably going to be seeing slow to no to zero growth. I'm still not on the side of negative growth, meaning recession. But of course, we've got other factors kicking in the first of the year, and if we don't remedy those, that would be, of course, the physical cliff. Then we could move into negative territory. Right now, it looks like zero growth, zero to very slightly positive in the months ahead.
With the slow growth, what is the impact of the drought? Has that been the biggest factor hitting us?
In this part of the country, it certainly has. The drought has had impacts on the businesses that we survey that are linked to agriculture. For example, agricultural equipment manufacturers. It's obvious to me as an economist that when the farm sector income is less sure, less certain, then farmers are going to be less likely to buy agricultural equipment, trucks, and so on. So that's affecting the businesses that we survey. The drought is pushing up prices. We asked in July about the impact of the drought on input cost and output prices, and not much of an impact. Boy, it jumped in August. In other words, they're telling us that the impact of the drought on what they're paying for their inputs. Now, it's still not as great as I would have expected, but it's up significantly in terms of what your inputs are costing. That would be raw materials and supplies. In terms of what you're selling, also some impacts, positive impacts on the price or selling. We asked the supply managers to look out 6 months. How much growth do you expect in prices? 2.8%. That's up significantly. Multiply that by 2 to get 12 months. That's about 5.6% inflation. That's well above what we've been seeing. So the Federal Reserve, they've got to start thinking about inflation again, unfortunately.
What about exports and imports? Are we seeing any improvement there?
Not really, Cindy. Those numbers are just down. New export orders down significantly. Of course, we got supply issues in terms of the drought with the Missouri and Mississippi rivers. Of course, not much on the Missouri, but on the Mississippi River, some problems there. We've got other impacts in terms of exporting to Asia, where their economies are slowing down. That would be, of course, principally China. But also, if you look to Europe, slow down there. That's coming back to us. That's the regional economy that we survey in the form of lower new export orders. So down, in other words, it was negative. So that's going to show up in trade numbers going forward. And of course, that subtracts from GDP growth. And we'll see that in the months ahead. So all in all, if you look at it from a political standpoint, and I shouldn't comment on politics, but this is not good for incumbents. So whoever's running for re-election, this economy is not looking as strong now as what we saw even 4, 5, 6 months ago.
How is the region compared to the economy in the rest of the U.S.?
It's somewhat the same, Cindy. The overall number from the ISM survey, which is identical for the U.S., of course that's the 50 states, that was below growth neutral as well. The Chicago number, which is for Illinois and other areas around Chicago, that was down but still above growth neutral. So all the numbers from the ISM, all the ISM surveys, the survey of supply managers, and of course these are individuals, men and women, that are at the front end of the chain, the economic chain. So we're going to see it later. What are we going to see? Slow to no growth in the months ahead. Hopefully that'll turn up soon. We've got also more inflationary pressures. Sorry about that. An increase in inflationary pressures also, and confidence is down. And of course that's sort of surprising. Of course, with the uncertainty surrounding the drought, you've got the physical cliff, that the increase in taxes January 1st. We've got the cut in federal spending. Then you got what's going on in Europe. And then you've got the elections. You put all that together, uncertainty, pessimism, economic pessimism.
What else about the survey that stood out for you?
Well, I think the all in all, it was, and this we seldom focus on this one, Cindy, is the delivery lead time indicator was up, meaning deliveries are slowing down. Now, why is that the case? Well, we've got supply disruptions. As I said, the Mississippi River traffic has been slowed because of the drought. You've got other factors in there in terms, and that contributing to that. And what that usually results in is inflation up in the months ahead. In other words, when delivery lead time index goes up, inflation is soon to follow. So all in all, if the Federal Reserve, and they're meeting in Jackson Hole right as we speak, they're talking, and they're saying sort of we got some room to move. I don't think so. I think they got to start to be cognizant, or at least watching what's going on the inflation front. They can't stimulate too much the economy without some concerns for inflation from the drought, but also from a cheap dollar policy as they flood the market with dollars.